G'day everyone. Well, thanks for joining in to this video. It's super exciting. I met Liv some time back and we've been talking to each other about each other's businesses. And really, there's a massive crossroad between Mining Store and SMSF AI. And a lot of our clients are setting up self-managed super funds to mine Bitcoin. So Liv, do you want to do a bit of an introduction of SMSF AI for everyone?
Absolutely. So I've been running SMSF specialist admin firms for over 21 years. SMSFAI was launched at the beginning of 2024 with the intention of helping more Australians set up and manage their self-managed super via an SMSF.
Awesome. And it's like such an important part of the world these days. Like people don't realize that they have self-managed super fund, right? Let alone that they can actually control it and get a better return on investment. So we'll definitely be tapping into that. But I'll give an introduction to Mining Store. So Mining Store has been around for about 8 years now. Personally, I've been mining Bitcoin for 10 years. And basically today we're the largest Bitcoin mining hosting provider in Australia. We're hosting over $60 million worth of Bitcoin miners for our clients. So it's grown a lot since the early days that my business partner and I were just mining in our home and our garage. Now we have hosting facilities overseas and really enabling Australians to mine Bitcoin passively and through their self-managed super funds. So yeah, really excited to get into it all today. And I suppose we'll move into why self-managed super funds. Do you want to tell us a little bit about, self-managed super funds and why Australians should be using them?
Sure. Well, quite simply, SMSFs are the most tax-effective vehicle to invest in Australia. So that's number one. And I'll talk about the tax benefits in a moment. But SMSFs are also the only vehicle where you can invest in alternative assets. So I'm talking cryptocurrency, direct property, commercial property, precious metals, literally miners and mining Bitcoin. SMSFs provide the flexibility for Australians to sit down and make investment decisions and investments with their super outside of your typical ASX 200, etc. So for many Australians, it continues to surprise me that their super really is either their largest for the younger Australians or the second largest asset that they hold outside of their family homes. And so many of them don't realise that it's absolutely your money, just not yet. So another very well kept secret about SMSFs is that if you have an SMSF, you can buy Bitcoin and eventually sell it entirely capital gains tax free. Australia's best secret, I call that.
Yeah.
So we're going to cover on that later on today as well.
I'm sure a few ears have perked up there and definitely from our clients as well. I'm sure that a lot of our clients are not aware that you can actually do that. So super interested to dive into that a little bit more. And I suppose, given the interview, we're talking about SMSF and mining. It has been a massive movement for our clients over the past probably 3 years, setting up self-managed super funds so that you can mine Bitcoin. So I'll tap in a little bit of what that actually looks like for someone that has a self-managed super fund. Obviously, a major benefit is because it is a fully passive investment, Bitcoin mining, and we're hosting the Bitcoin miners for our clients, it is actually approved that it can be put onto the self-managed super fund. Also, it's a long-term investment. The way that our clients are looking at it is they're not going to be disappointed with the amount of Bitcoin that they're holding by the time that they can access their super. We've seen over the past 10 years just how well the Bitcoin has performed and the projections for it continuing to perform are substantial. So yeah, it's a really great way to passively accumulate that Bitcoin and constantly know that when I retire, I'm going to have a great storage of Bitcoin there ready to access. And obviously, as you mentioned, getting it tax-free is a massive bonus there too. So
Yeah, I think
another big side of it is it's completely scalable. So with Bitcoin mining, you can start at an investment as small as $8,000. We have clients that are purchasing millions of dollars worth of Bitcoin miners and constantly mining that Bitcoin every single day. So it's very scalable. There's not really any limit to how small or how big you can go on it. And then finally, obviously, a really big benefit that we like to talk about as well is the pure dollar cost average strategy that you're achieving when you're Bitcoin mining. So a lot of people get that paralysis by analysis. They're not really sure about, should I be buying now? It seems like it's all-time highs, or when should I be buying in on the dip? And what we get as feedback from our clients is when you set up the Bitcoin miners, you're constantly mining Bitcoin every single day at every single price. So if you bought Bitcoin today at 120,000 and God forbid you got it wrong and we start going down into this bear market and we get into the 90s, 80s again, you're probably going to be feeling a little bit uncomfortable. But when you've got the Bitcoin miners, you might buy Bitcoin miners today. And as Bitcoin's price goes down, you're mining Bitcoin at those lower prices. So really achieves that dollar cost average strategy, which, is a really desirable thing for most people investing these days. So, Liv, one of the amazing things about self-managed super funds is the concessional amount that you're getting taxed at, and also the amount that you're able to put towards your self-managed super fund per year. Do you want to talk a little bit about that? And then I'll talk about how our clients are using Bitcoin mining to write off expenses and things like that too.
Sure. So say you're earning tax and you're at the highest marginal tax rate, you're paying up to or losing up to 47% of that in tax to the government. Now, if you were to take that income and contribute it into super, you're only losing 15% as contribution tax by putting it into a super fund and then investing it. So already you're getting a far greater benefit from contributing it to super as opposed to taking the money and spending it. Now, once it's in the super environment, any income or any capital gains in the first 12 months are taxed at a maximum of 15%. I'll talk more about that later.
Yeah.
So because SMSFs are, or because super in general is the most tax effective environment that there is, there are limits around how much you can get into super. So the concessional contribution limits, or the amount that you can get the tax deduction on for contributing to super, is 30,000 per individual. But there is a thing called the carry forward contributions, where the government have announced where if you haven't used concessional contributions in prior years, you can actually jump on MyGov, have a look at what your limits are, and work out how much of prior years you've got that you can include in that figure. But for simplicity, let's assume 30,000. Then we have non-concessional contributions, which are contributions with after-tax money, and they're generally from savings or inheritance or investment windfalls, whatever it might be. You can contribute after-tax money into super, but it's up to an amount of 110,000 per person, or 330,000 if you bring forward 3 years and do it one go. So there are limits about how much you can get into super because of the tax benefits that the environment provides.
Yeah, it's amazing. And look, it's something that our clients, as I say, are really taking advantage of. So what a little bit of a strategy we've seen from Bitcoin miners on our side is using that 30,000. A Bitcoin miner itself is usually about $8,000 a miner, and the power bill that you pay per month can be around $3,000. $300. So by the end of the year, around $3,600. So what a lot of our clients tend to be doing is using that 30,000 contribution at the end of the year to cover obviously the year of power bills for say around 10 miners that they have on their super fund. I also want to mention that our clients, when they purchase these miners, it's an expense in the self-managed super fund, and also the power bill they're paying is an expense. So yeah, it's such a great vehicle for people to really be getting that extra edge and doing an investment at its best possible and with the lowest tax rate that they can achieve too. So I think you want to go into a few slides, Liv, and have a little bit of a look at what it might look like someone who is just using a normal super fund compared to a self-managed super fund.
I do. So one thing that I like to say is start with the end in mind. And I think it'd be fair to say that there's quite a few investors out there who got into Bitcoin or crypto early with whatever money they had, not thinking about the tax consequences and what's going to happen down the track,
Yep.
who are hurting with their tax bills that they're paying to the ATO with what they are choosing to sell and utilize and spend now. So let's say we're going to start with the end in mind. I'm going to go through here how if you've got $100,000, if you take $100,000 inside super in 20 years' time with the value of compounding, that assets or that investment's going to be worth $521,000 compared with investing outside super or personally, where at the end of 20 years, that investment's going to be worth, say, $279,000. So big difference there. But when we get to that point, what I'm going to explain now is how you can then sell that $500,000 asset inside super entirely tax-free, giving you $500,000 of cash. Versus if you have that $278,000 investment personally and you then sell it, now you've got another tax bill to the ATO of another 47%. So let's go through how that works in practical terms. When you invest inside super, there are benefits around getting it in. Now, these are my calculations for the purpose of this. We're going to assume that the $100,000 invested is going to be invested at a rate of return of 10%. And I know we all know Bitcoin's outperforming that, but 10% of which 6% might be capital growth, 4% might be income. So it applies to any type of investment within super. We're going to assume that there's a capital gains discount outside of super of 50% if the assets are held for more than 12 months. Inside super, CGT is 15% or 10% if held longer than 12 months. And we're going to look at a time frame today of 20 years. Now, the immediate tax benefit of putting the $100,000 into super is going to mean that you can start off with a starting investment of $91,000. Now, that compares to outside of super, where you'd be starting with a starting investment, a cash amount of $72,000. So already we're ahead by putting it in super. Then we're going to use compounding annual growth at 10% per annum. We're going to allow for an effective annual return inside super of roughly 8.5%. And that's how we get to your $91,000 from your 100K investment becomes $520. Outside super, we're going to talk about your $71,000 achieves an effective after-tax return of roughly 7.1%, which will get you with compounding to $279,000. But then what? Now, as I said, self-managed super is the only super vehicle where you can convert your account from accumulating, so that's where you're contributing into super and building it up, to pension mode. So where you start a pension where any income or any capital gains you earn is entirely tax-free. Now, because that's so good, there are limits, of course, around how much you can get into super, as I said, and there's also what's called a transfer balance cap on how much you can commence a pension with. Now, at the moment, that's $2 million per member. So let's assume you've got a fair way to move with that $100,000 investment before you're going to get anywhere near any of the caps. But you can literally sell that investment entirely capital gains tax-free, which is just so powerful. So if we're gonna, as I said, start with the end in mind, if at the end in 20 years, that $100,000 investment in super is going to be worth $520,000, as I've got here, but outside super, once you sell it, as I said, and pay your tax on the sale of the investment to the ATO, you're going to be left with $146,000. So this is a perfect example of how the rich get richer.
It's such a big difference, isn't it? And people probably just really aren't aware of it. They really need to be taking more seriously. It's one of those things I think everyone has a short-term vision, and it's probably the biggest thing that stops good investors from great investors is having that long-term vision. The super is one of the most long-term vision investments you can have, but when you get to that age of when you can start accessing it, you're going to be thanking yourself if you're really taking these steps and understanding these things. So yeah, thanks so much. I'm sure even my audience will have a lot to learn from that, Liv. So that's awesome.
Sure.
Apologies, guys, my camera cut out, but we're back here. So, Liv, I've got a couple of questions with self-managed super funds, and mostly just around the general questions that everyone's really going to ask. What's the cost to set one up? What's the annual fee for managing it and doing the accounting side? And how long does it really take from someone putting interest in with you that they want to set it up to being able to start making their investments?
Okay, so the first question that I'm asked is, how much do I need to start an SMSF? And look, that's the number one question I get. And the answer is, in the old days, people used to think it was $500,000, but the reality is SMSFs can be as cost effective from $200,000 as other types of super vehicles. But that's when you're comparing it based on the cost. Now, if people were to set up an SMSF, as many of my clients have, and invest in cryptocurrency, they're going to see, and it's likely that they're going to see returns that far out, far exceed what any other super vehicles are doing. So
Mm,
those clients actually don't care about what the running costs are, the SMSF, because they're only slightly higher than what they were paying because of the returns that they're generating and the investments that they're getting access to. So on that basis, to establish an SMSF using a corporate trustee structure is with us, for example, $1,550, which comes out of the new super fund.
okay.
So from there, a lot of people don't realize the running costs of an SMSF are the same as any super vehicle. They have to come from the fund themselves. So the running costs, if you were to do, say, mining in crypto, if you're investing in cryptocurrency, which is more difficult to account for from a tax perspective than
Hmm.
traditional assets, as I'm sure anyone in crypto will know,
Hmm.
because many accountants hate it for that reason. But an average fee is around $3,000 all up for expenses to run the fund, and that's with a specialist administrator. So one thing many people may have found is that there's two things in Australia. One is that there are no financial advisors that are licensed to advise on cryptocurrency. So if you go to an advisor, they're not going to be able to help you. And many accountants aren't actually licensed to establish self-managed super funds anymore. So a lot of people might be turning to their accountants and going, can I set up an SMSF and invest in Bitcoin or in crypto? And the accountants are saying, no, you can't do that. Well, the reality is you can do it. And you can set up an SMSF with any amount that you like, provided that the sole intention with running the fund is to generate investment returns to provide for your retirement. Now, one other thing to mention is that in a self-managed fund, you can actually have up to 6 members. Now, I haven't seen a 6-member fund, and traditionally you only see them with like big families where the parents want to put all the children in it together.
Yeah.
But quite commonly, you see spouses in a fund together, so husband and wife. So on that basis, say you've got two people with $100,000 in super, already there's your 200,000 to start an SMSF. And again, that's if you're comparing on cost.
No, it's very interesting. And look, I definitely agree with you on that blanket statement of 200,000. It's not quite right, and not financial advice, what I'm about to say. But when I was thinking about it in my own head, if someone has $100,000 in their self-managed super fund, yes, they may lose 2 to 3%, right, from the annual fee. But if they're investing into other things like, say, Bitcoin, which people would say at a lower, more conservative rate has been doing 30% per year, that's still 27% that they're doing compared to a super fund that's what, 5 to 8%, I think, these days. So definitely, good to think about it. I would personally say, and again, not financial advice, if you had 100,000 in there, it's something that, I would start to be thinking about, absolutely, for sure. So thanks heaps for that, Liv. And what about the typical lead time? Someone comes up and they say to you, yep, Liv, I'm keen as to set up a self-managed super fund. How early can they really be expecting to then start making the investments that they want to make?
Sure. So as administrators, we've got the process very efficient. We can set the fund up within a day. So that's
Wow.
the fund set up, but then we're waiting on the ATO for about 2 weeks.
Okay.
So they need to regulate it and make it a complying super fund. Once they do that, which is usually in about 2 weeks' time, you can then open the bank account and organise the rollover. Now, one tip here, institutions will do everything possible to hang on to that super money. So we really do have to hassle them on that rollover. But look, I've seen people do it and they can get from start to finish, have the fund set up within 2 to 3 weeks.
Yeah, right. Amazing. That's a lot quicker than I think most people probably would think, to be honest, that they can really take control of one of their biggest investments in 1 to 2 weeks. That's actually a very short
That's
lead time.
21
So,
years of experience making it as simple as possible.
well, that's the edge that you've got there. So well done. And okay, cool. So, what questions do you have for me? What questions might your audience have on Bitcoin mining, Liv?
Okay, so I first saw Bitcoin mining in an SMSF as early as 2018, which was interesting. But back then, it was very, very messy. People doing it from home, trying to keep copies of receipts and everything. So, from an SMSF's perspective, one of the most important things that trustees need is to provide evidence for the fund auditor. So, one of my very first questions is, when the Bitcoin's being mined, what happens to it? And like, how does it physically go from the fund to the SMSF?
Yeah, great question. So, We really keep things simple and same as what you're doing for your clients. The idea of coming to someone like Mining Store is, people who are keen as to hold Bitcoin, they want to mine Bitcoin, but they don't understand what's going on. So that's really our edge is we're making it very simple for our clients. And that's all the way through to us hosting it for you. You don't have to worry about anything like that, as well as setting you up. So when it comes to tax time, everything is just handed straight over to your tax specialist and they can deal with everything. So what that looks like, you've got the Bitcoin miner being hosted at our hosting facility, and that's connected to what we call a mining pool. Okay. That
Hmm.
mining pool is what's winning the Bitcoin rewards. And then essentially you are able to put in a wallet address, whether it be an exchange Bitcoin address or a cold storage wallet address. You can
Hmm.
put in a wallet address for that Bitcoin to be paid out to. Okay. Now,
Hmm.
when you're setting up a Bitcoin mining entity, you want to make sure you're not sending it to your trading wallet or your, exchange where you're doing all your trading and things like that. Send it to its own wallet. So everything that to do with this entity is just with Bitcoin mining. That way, when it comes to tax time, all you really need to do is show your accountant your Bitcoin wallet. That shows when all the Bitcoin is landing in there, and everything is really simple from there.
Yeah. And so that's one thing to note with an SMSF compared to holding cryptocurrency personally is that you do have to provide the wallet address of your assets to the auditor at the end of each year.
Spot on.
Yeah. Okay. So in terms of the audit trail, the wallet address will show the date that the Bitcoin, like what was received and what the value was.
That's spot on. Yes, exactly right.
Yeah. So I've got to take a break there and check the next question.
No, no stress. Let me take a drink as well.
What's the next one? Okay. Yeah, got it. So I've bought a miner. So my question to you is, how long can I expect in reality for that miner to live? For two reasons: one before it dies, and one before all the Bitcoin's mined. Like, when's that going to happen?
It's such a funny one, all the Bitcoin mine. It's probably one of the biggest myths out there in the cryptocurrency industry. People think that once all the Bitcoin's mined, what's going to happen and how a Bitcoin miner is going to earn. So I'll address that one first,
Hmm.
and then I'll go into the lifetime expectancy of the miner. So when Bitcoin was first launched, as we all know, there's only ever going to be 21 million Bitcoin out there. Okay.
Hmm.
Now, when it first launched, all that Bitcoin was sitting in a treasury. And the way that that 21 million Bitcoin was being injected into the economy was every 10 minutes, a Bitcoin block reward was mined, and that reward would go to the miner who solved the block. Okay. Now, when it first launched, the reward was 50 Bitcoin. Imagine getting 50 Bitcoin today. You'd be doing some different things. You'd be traveling the world, whatever it might be. So over every 4 years, that reward has been getting halved. Okay. So it went down from 25 Bitcoin per block reward, 12 and a half, 6.25. Now we're at 3.125 is the block reward every 10 minutes. All right.
Hmm.
So today, 20 million or so, or about at 20 million of the Bitcoin has been rewarded to the miners, and there's only 1 million Bitcoin left to mine. It's going to take another 100 years for that last 1 million Bitcoin to be mined because of that halving. Every 4 years, it's, halving the amount that they're getting rewarded. Now,
Yeah.
what people don't understand, there's actually two rewards that miners get. One is that 3.125 Bitcoin, but the other is all of the transaction fees that are occurring in each block. Now, when Bitcoin first came out, those transaction fees, it was not really much. It wasn't much to worry about. Today, we've actually seen blocks where the transaction fees, the reward from the transaction fees is higher than the treasury reward that we're getting. Okay.
It's nuts.
So mining, as it stands today, I can't predict the future in 10, 20, 50 years. Who knows if, we're even going to have internet or whatever in that long
Mm.
time, what I'm saying? But as it stands today, there is always going to be a reward for mining,
Mhm.
and the transaction fees will make up a larger portion of that as that treasury starts to go down. So mining will be around for a very long time, and we've been profitable for a very long time. Now, in regards to you buying your miner, Liv, and these are the questions I ran through with you when you
Mhm.
first got onto it. Basically, the amount of time that we can expect a Bitcoin miner to last for is around the 4 year period. Now, like when you go and buy a new iPhone or you go buy a new desktop, over the lifetime of it, it can probably last for 20 years, but it's going to be out competed and it's not going to be compatible. And, there's other things out there that'll outperform it, making it obsolete. So that's why
Mhm.
we give that 4 year time frame. But I do have miners of my own, which have been running for about 6 years. That's the oldest that I have, and
Yep.
starting to shut those off now. Okay.
Yeah.
So 4 years is around what you can expect.
Mhm.
And basically, what our clients tend to do is they'll buy one miner now. They're mining, for example, look at someone that bought a Bitcoin miner 4 years, okay? 4 years ago from today. They were
Mhm.
mining Bitcoin at $10,000 a Bitcoin, $20,000 a Bitcoin, $30,000 a Bitcoin. Fast forward to today, 4 years later, they're looking at that Bitcoin that they've mined and going, wow, it's 12 times in value in some people's cases. I
Yep.
can now sell that Bitcoin for a much higher price and buy a new fleet of miners, maybe one, two, three more miners with the rewards they've earned from there. So
Yep.
that's how you can scale out your mining. It's a long-term game. You're not really looking at your reward coming on a daily basis and celebrating on, the next holiday that you're going to go on. It's about stacking that Bitcoin long-term in a very passive way and getting that dollar cost average, mining some Bitcoin at every price every single day.
Which is why, if you're a Bitcoin fan like me, it makes sense to do it inside super, not personally, because it is that long-term investment.
Spot on. Yeah,
Yeah.
you've really nailed it there. And yeah, it's a big movement that we're starting to see. Also, I want to note as well, when with the super fund side, as you say, it's money that you can't access today. So a lot of people want to set their financial future up, but they don't want to affect their personal cash flow. They need personal cash flow to pay their mortgage or some other things they've got going on. So it's a great way to be able to get into, say, a higher net wealth investment, something that does have a bit more of a capital, starting point at $8,000 a miner and $300 per month for the power bill. The self-managed super fund, a lot more people can actually get into that investment when they're doing it that way. So yeah, really good point you raise.
Yeah, and let's talk about as well the value of storage, because I know that a lot of people don't realize what if you have a miner at home, that not only is it noisy and hot, um, but your power bill increases, and it's not as straightforward, if at all easy, to split the running costs of that miner and allocate them to the SMSF when it's also part of your family home. So, from that perspective, having a facility like you've got where you can set and forget and where it's insured, because that's the other thing is if you've got a miner at home, it's going to have to go on your insurance, which could drastically impact your policy. There's just so many benefits to having someone where you can go, just take it, set it up, and just, yeah, send me a monthly bill and the super fund can pay it. It's so easy.
You're spot on. And yeah, it's really taken me back to the heydays. As I said, I've been in
Yeah.
crypto for 10 years. My introduction to crypto was in Bitcoin mining. And I first found out, like, from gaming communities, that you could mine Bitcoin on your desktop computer. So that's where I started. And then me and my best mate from high school, who's now my business partner, Cal, we started building these GPU rigs. There were 8 graphics cards on this frame, and they were loud. They were generating heaps of noise. At the time, I was living at home, and my parents were hating it. We then scaled out and we moved out of home. We had one of our rooms in our house was fully for these Bitcoin miners. So it was nuts, but we kind of realized, once we started having, it was, 20 or $30,000 worth of equipment in there, we
Mm.
can't keep scaling this at home, right? Like, we need to have, something set up in a warehouse or whatever it might be. And also the power cost in Australia was so high. We're paying 20, 30 cents per kilowatt hour. It didn't really make as much sense anymore. So yeah, you're exactly right. Today, the way that you mine Bitcoin is we have these hosting facilities set up overseas because we have such huge amount of power being consumed at these facilities, $60 million worth of miners over there. You can imagine the amount of power that it's drawing every month. We get such a good electricity rate. So the electricity rate at these facilities is 13 cents, and we can pass that on to our clients. And that's what really makes it profitable to be mining. And then obviously the benefit on top of that is, you're not going to have your spouse or your family members saying, what the hell is this noise every night? And why is it so hot in here? And all the rest of it. And maybe a miner going down and you've got to fix it. We really take care of all that for you, just making it a passive investment. So yeah, that's yeah, a massive bonus of using a company like Mining Store is, it's all done for you, passive, and you don't really have to see it. You just see the Bitcoin land in your wallet every single day.
So, Will, if somebody wants to go ahead and find out more about buying a miner, what should they do next?
Yeah, so I'm really big on education. I'm not the kind of business where you just go onto our website, buy the miner, you don't get any kind of feedback, or is this even the right investment for you? So I really like our clients to be completely comfortable before they go into it and understand everything that's at stake when you get into Bitcoin mining. So the best way that we do that, we do booked in consultations. Taylor, who you've met, Liv, brilliant at what he does. He really makes it simple for everyone. He's our head of mining, and you can basically book in a call directly with Taylor. He's going to run through all of your questions to start with, everything you need to know about mining, show you the numbers, show you how it all works. And then if you choose to purchase your miner, there's usually a lead time of around 2 weeks when we acquire that miner, send it to our hosting facility for you, and get it online for you. And then, yeah, you're really off to the win, and you're racing with everyone else and mining Bitcoin and earning it every single day. So, yeah, it's a simple process. We usually recommend, like yourself, Liv, just to start with one miner. You don't have to go into a 10, 20, 50 mining fleet of miners. You can start with one, see it all connected, and then go from there and make sure it is the right investment for you. So that's how you get in contact with the Mining Store, Liv. How do my clients get in contact with yourself? What's the best way for them to start learning about self-managed super fund and set one up ideally?
Sure. So the best way is to go to our website, smsfai.com.au, have a look around at what's involved. There's some really good blogs, especially for younger, more innovative investors around, what people are doing, what the trends are that we're seeing. But also have a look at our points of difference, how we work. One of our claim to fame and the AI part is that we're the only provider or the only super provider in Australia that uses AI to take information from our software and convert it for trustees into a 3-minute video format. So
Wow.
at the end of the year, instead of getting a set of financial statements or a set of SMSF documents and not being able to read them or know what they mean, you get a 3.5-minute videos with the financial statements that will tell you quite simply how your fund's performed, what it's done compared to previous years, and how it's sort of performing by member. So really great stuff. So visit our website, go to Get Started or contact us, and that will send an inquiry through to one of our team members.
Unreal, Liv. It's been awesome meeting you and everything that you do. I really think carefully about who Mining Store partners with. So, reason we chose you is, your attention to detail, everything that you do for your clients, and I can't wait to start hearing the success stories of clients of ours coming across to yourself to set up the self-managed super funds and yeah, get into the Bitcoin mining through it or whatever else they choose to do through that self-managed super fund. Is really up to them. So, really enjoyed speaking with you today, Liv, and yeah, can't wait to hear more from you.
Thanks, Will. Thanks for your time today. We've really appreciated it too.
No worries. Take care.